Welcome back. The market has been down this year. You've seen stocks fall for much of the year. It affects everything from investments to 401ks, but things could be changing. To help us understand that, our local financial advisor, Bruce Allen, joins us. Good morning.
Good morning.
Good to see you.
You as well.
Okay, so it's been rebounding last few weeks anyway. What's going on with the market?
Yeah, so far this year, the market from the beginning of the year till September 30th, October 12th or so, market was down about 24%. And then since October 12th, we've seen a pretty decent rally. The S&P is up over 10%, 10.8%. That has not made the year profitable yet, but it has shrunk the loss so that now the market is down, as of yesterday, a little over 15.7%.
And when was it? Last Thursday, we saw this huge jump in the stock market. What was that all about? And is that like a harbinger for the future, maybe?
Yeah, the first thing is the short-term news was that instead of going up 8% plus, that inflation was up 7.7%, which is still a fairly significant number.
Yeah.
You're probably feeling that when you go to the grocery store or the gas station still.
Right.
But the fact that it's coming down from the 8-9% level, that's very good news. And we've started to see some optimism that the Federal Reserve's policies of raising interest rates, those are starting to potentially bite. And inflation is at least not accelerating anymore, and it's coming down in terms of its rate of change.
And so the market loves that.
It sure does. It's hoping that some way, if the inflation rates are not increasing, that we're actually going to see slower or peak rates very soon.
Yeah. Okay, so what should investors be doing then? You know, they've been kind of hunkering down all year because things have been so bad, but should they be investing now?
I think there's a couple things. One is that everybody has to have a plan, and sticking to that plan is the number one thing. That's the most important. If, for example, investors are light in stocks or heavy in stocks, they should be rebalancing either way based on their portfolio, and that's individualized, so they should be talking to their advisors. I think there's a couple things. One is that nobody can predict the markets, so whatever's going to happen is going to happen, but over time, stocks have beaten fixed income. I think that it's likely that we're going to see some kind of a change here sometime next year, and the markets are going to bottom and come out of this market downdraft. We've seen in the past, at least, Gary, historically, that after midterm elections, markets tend to rise. And so hopefully we'll continue to see what we've seen here since October 12th.
All right. Stay the course, I guess, is the advice.
That's right.
All right. Always good to see you, Bruce.
You too, Gary.
Thanks.